Hey everyone, I'm really excited about today's video. Actually, I'm going to be talking about the pros and cons between commercial real estate and residential real estate. Alright, so I know you guys have asked me to do this video like a month ago. I'm so sorry, but that is what we'll be covering. We'll be covering like 5 to 10 factors, the pros and cons, so you can decide whether your first or next property should be residential or commercial, okay? Entirely different asset classes. My name's PK, and I help people build passive income by buying property that have the combination of positive cash flow and high growth without needing a 15K buyer's agent, without needing to fly around the country, using data. All right, guys, so if this brings you value, hit the subscribe. If you've already hit subscribe, turn the notification bell on so you get these videos. I release one every 2 days. If you're in my Facebook group, thank you so much for being there. If you're not there, there's more than 7,500 investors and clients. Join, free strategies, deals, all that kind of thing. And please, please, please like this so that YouTube sends it to more and more people. All right, let's get into it. So what I'm going to be doing is I'm going to be going through the pros and cons of residential versus commercial real estate through 5 to 10 factors. Those factors will be, I'm going to read from my notes. I always prepare notes for you guys because I want to get this right and get it clear and articulate. We're going to be going through the deposit required, the due diligence required, the yields, the leases, the bonds, the outgoings, the repairs, the depreciation, the vacancy, the cash flow, interest rates, the capital growth, property management, and value adding strategies. So there's a lot there. All right, there's a lot there. So I'm going to be going through this pretty quickly. If you want more detailed video that allows me to go in maybe 20-30 minutes, really give you in a lot of comprehensive detail the next level of depth behind any of these factors, leave a yes below, a yes, Y-E-S, and that will allow me to see how much of you actually have interest in this kind of stuff. Okay, so let's get into it. The first thing, deposit required. So generally in residential real estate, you need about a 10 to 20% deposit, okay? If you think you need 20%, you actually don't. 10 to 20% is fine. In commercial, you really need more like 30%, okay? 20% you can sometimes get away with, but to be on the safe side, as a general rule of thumb, you do need like a 30% deposit. And so here's the thing, if you've managed to save up 60, 70, not even 60 actually, if you've managed to save up 40, 50, 60, 70, 80, $90,000, $100,000, you can very, very comfortably afford a residential property investment property. If you have that much saved up, you can't really invest in commercial. And here's the thing, I know commercial is becoming more and more popular these days, and a lot of these kind of new commercial buyer's agents have been popping up. But really, a good commercial asset, I'm talking rule of thumb here, a good commercial asset generally costs around, I want to say $700,000 to $800,000 plus. Yes, you can buy ones cheaper than that. I have one cheaper than that in my own portfolio. But really, as a rule of thumb, a good, safe commercial asset with a good tenant is above 700, 800K. So, if you need 30% of that, 30% of 800K is definitely not 40, 50, 60, 70, 80, $100,000. You need more like $200,000, $300,000. So that's one of the key differences. The second difference is due diligence. Now, the due diligence is not more difficult in commercial, unlike what a lot of content you might be absorbing shows. It's just different. The predominant due diligence that you need to do on the commercial is on the tenant. It is the tenant that is making you money, not necessarily the area or anything like that. You could be in a great area, but without tenant, you're not making any money, neither cash flow nor growth. So you need to be able to understand their business, okay? Whereas in residential, it's entirely down to the location. So different type of due diligence. Number 3, yield. So in residential, you can have yields, let's say Melbourne, Sydney, from all the way from like 2% gross yield. And generally where we invest, 5, 6, 7% in, you could say non-Melbourne, Sydney capital cities, and also secondary cities and regionals as well. So the yields are actually pretty good in residential if you know where to look. That residential real estate is not one blanket statement saying yields are low. It's not true. Australia does not just consist of Sydney, Melbourne. But by and large, in commercial, the yields are much better. So whereas in residential, we're talking gross yields, in commercial, they're more net yields. So the net yield, or at least partially net yield, might be 5-6%. Okay, 7% is actually pretty difficult to get these days, but 5, 6, 7%. But keep in mind, not all commercial leases are net. Like, it's a throwaway statement that oftentimes buyer's agents say, oh yeah, net lease, net lease, net lease, all this kind of stuff. But actually, a good buyer's agent, you know what I think of them, at least in the residential side, a good expert will tell you that not all commercial properties have a net lease. So oftentimes you get your lease, but you still have to pay property management fees, which aren't covered by the tenant. Still have to pay insurance, which isn't necessarily covered, rates, maintenance, land tax. All these things add up, okay? So it's not necessarily the case that commercial gives you 6 or 7% net yield. I know this is different from what everyone else talks about that's trying to sell you a commercial property, but this is the reality, okay? I have commercial assets, both on the development side and the buy and hold side. And actually I have some friends who are buyer's agents, and they're good buyer's agents in the commercial side, okay? But equally, you can do this alone as well. It's not that hard. So, you know, if I was to compare yields, I would say commercial is slightly better, but I wouldn't say anything like double the yields. You know, you can buy properties that give you 5 to 6% gross yield in residential, which turns out to be about 4% net. Compare that with like a 6% net, partially net commercial asset that after property management fees, a few other things, brings it down to like 4.5 or 5. So it is better, but not by a huge order of magnitude. All right. Leases in residential, you know, your leases are typically 6 to 12 months. In commercial, your leases can be a year or 2 years or 3 years or 5 years. Typically, those are the common ones. So there's more longevity in commercial, which is a good thing. Now, in terms of outgoings, I just explained that in commercial, it's not necessarily the case that the commercial tenant pays all the outgoings. You need to be very careful. Normally, the triple net or leases where the tenant actually pays for everything, property management fees, insurance, rates, land tax, maintenance. Those are the types of commercial assets that you're paying more like $1 million, $1.5 million, $2 million for. So if you're looking in the sub-million range, it's not necessary that all of your leases will be net of all costs. Be very careful with that one. Depreciation, look, once again, sub-million mark, I don't think there's a huge difference in depreciation, especially if it's, you know, freestanding. It's not necessarily the case that the commercial property has better depreciation. Maybe in some instances, but not all instances. Vacancy. Now, this is one of the key things about commercial. So people automatically think that, okay, commercial is giving me 1%, 2%, 3% yield higher. All right, longer leases, great. But here's the thing, the vacancy is always much higher. Now, you may get lucky, you may find a commercial asset that is tenanted for the next 5 years, 10 years. But if we are talking averages, and that's all I can speak to you because you're, you know, thousands of people, generally speaking, in residential real estate, the average vacancy that you should experience, if you know what you're doing, is less than a week a year. Okay, you didn't hear that incorrectly, less than a week per year. In commercial, every 5 years, my train of thought tells me, based on everything that I've done, experienced, heard, and I've been around for a long time, every 5 years you hold a commercial asset, you should budget for 6 months of vacancy. Okay, 6 months for every 5 years. So that's like a month a year, or, you know, just over a month a year. So look, if you can stomach that, if your cash flows enable you to be, you know, comfortable with that, then commercial's fine. But if you're not comfortable with that, then, you know, once again, you need to think twice about buying commercial assets. All right. Now, interest rates are a little bit higher for commercial assets, often like maybe 1% higher. It depends bank to bank. Probably 5 years ago, that the difference was even higher. Now it's like 1%. In the future, it might increase again. Capital growth. Now, the next factor is capital growth. So capital growth in residential real estate is entirely dependent on the location. Okay, that's why we use 35 data factors to get that location honed in. The capital growth in commercial is dictated, you could say, by 3 or 4 things. The first is location. The second is whether the tenant increases the rent every year. So whether your lease agreement has the tenant paying more and more. Commercial assets are often valued by not what comparables have sold for, but by what yields comparables have sold for and what yields that asset is getting. So if the rent goes up every year and comparables have been sold at 6% yield, then the value of the commercial asset will be higher because rents have gone up. Yield is a product of rent and yield. Therefore, yield is a product of rent and value of the asset. So if rents have gone up, the value of the asset goes up as well. Okay, so that's the first thing. Commercial capital growth is judged by location, A. B, by rents going up. C, by yield compression. Now, what that means is that rents haven't necessarily gone up, but more and more people want to buy that similar type of asset, and they're happy to stomach a lower yield. So even though rents haven't gone up, people are just bidding more and more and more for the same asset. Okay, it's subtle, the difference. The first one, where rents go up, is one way to get capital growth. The second is where rents don't go up, but people are happy to get it for lower yield. Okay, that's called yield compression. And the last one, really, in terms of capital growth, or let's actually switch it up. Let's talk about value add factors. Okay, so I talked about capital growth. The next factor is value add. So in residential real estate, you can subdivide, you can renovate, you can put a granny flat in, you can split, you can develop. Similarly, you can value add or manufacture equity in commercial through things such as increasing the rent, renegotiating the lease period. So it might be a 2-year lease, you renegotiate to a 5-year lease. That increases the value, because remember, the value is a product of the tenant or the terms of the lease. Okay, so that's another way to add value. Then, of course, you can subdivide or develop or strata title the commercial asset as well. All those things are very similar. So there's no real huge pros and cons in terms of commercial and residential in terms of value add. Both have their manufacturing equity type of procedures. And the next factor is property management. So residential property management, you do need to outsource. You do need to outsource, especially if you don't live close by your asset, your residential property. And I mean, it's not too difficult, but there's a few loops and hoops and legal ring rolls to be mindful of. In the commercial space, it's much easier. Okay, you can actually manage it, so you reduce that cost potentially if you have a bit of time. It's just like a contract. If the tenant stops paying, it's not like they have rights and you have rights and landlord and tenants go to war. It's just a contract. Take them to court. Whoever wins, that's how you end up where you end up. All right. So those are the factors. Like if I was to summarize this and say, should you invest in residential property or should you invest in commercial property? Let me create 2 segments. If you have more than $200,000 or $300,000 deposit, if you're happy in your cash flows to stomach a 6-month lease ending or a vacancy period every 5 years, and if you're sort of happy to say, all right, well, capital growth is important to me, but cash flow is more important to me, and I don't really need that equity to increase to buy more and more assets, then commercial is what you should be investing in to start your portfolio or to grow your portfolio. But if you only have 100 or less than, let's say $50,000 to $100,000 of deposit, let's say $40,000 to $100,000 or $40,000 to $150,000 of deposit. If you don't want vacancy, if you really need that cash flow to be consistent and regular, and if you are relying on capital growth to be able to refinance properties and use that equity to fund future deposits, then you really should be buying residential real estate. All of these are generalizations. There are always exceptions to any rule. Like all of this is nuanced, but hopefully this gives you some indication on whether you should be buying residential versus commercial. Now, this is already a 15-minute YouTube video, guys. So if you want me to deep dive and really go into the specifics, whether it's about due diligence, whether it's about deposit, whether it's about lending strategy, leases, yields, capital growth, all the factors that I've talked about. If you want me to go deep dive, leave a yes below, and that will give me the impetus, the reciprocation that, yeah, actually you do want that, so I'll produce another video on that. And if this video gave you value, give it a thumbs up, give it a like, and that way the algorithm will send it to more people. My name's PK, and yeah, I'll leave a link below to the Property Investment Accelerator where you can actually learn to do all this stuff yourself. I mostly focus on residential, but commercial is coming as well. All right, guys, have a fantastic rest of the day. Catch you later.